Hey everyone, Daniel here and welcome back to another video. Here today, we have 10 growth stocks that have fallen significantly over the past couple of months. And if you've been involved in the stock market in recent times, you know that a lot of these high growth, high multiple names have been getting hit very, very hard. And in this video, I have 10 growth companies that have fallen significantly in price over the past couple of months that, in my opinion, are very attractive long-term opportunities from a long-term investor's point of view. So if you enjoy these updates, please consider subscribing and let's get into it, guys. Stock number one on the list is Lemonade, ticker symbol LMND. Now, this is a company revolutionizing the insurance industry. Normally, when you think about an insurance company, you think about a boring company that tries to scam you out of your money. Lemonade is changing that narrative through two main ways. One, artificial intelligence. Lemonade has an artificial intelligence bot that makes the process of signing up for your insurance program very simple and easy. This AI bot tracks thousands of different data points to really try and get a sense of risk per customer. So if you have a customer with a lot of risk, you obviously give them a higher price for their, whatever program they're choosing, whether that be pet insurance, homeowners insurance, renters insurance, life insurance, or car insurance, which Lemonade is expanding into in the back half of this year and early 2022. When we look at a company like Lemonade, they also have a give back program that they participate in every year. This is meant to essentially stabilize their profits on a yearly basis. Any excess money that they make in any given year gets given back to charity. So in this situation, it incentivizes Lemonade not to essentially not give people money, and it incentivizes people to not make false claims and scam Lemonade. Why? Because they're essentially just scamming the soup kitchen that they volunteer at potentially on a weekly basis. When we think about a company like Lemonade, they're changing the narrative really behind the insurance industry, and in my opinion, as long as they continue to expand, they will be able to expand and really fit in with some of the biggest insurance agencies in America. If you don't know what Lemonade is, I recommend you go to lemonade.com, look around at their site, and take a look at why it's different from other companies. Next on the list here, we have Palantir. This is a company that I've been talking about quite a lot over the past couple of weeks. If you'd picture a company like Palantir, you can really think about it as artificial intelligence and data. Using artificial intelligence to maximize your potential profits at a company, your potential exports, or other things along those lines. Spot trends. Palantir is a company heavily involved in the United States government, whether that be in potentially financial segments or military systems. Palantir has it all. When we look at a company like Palantir, they have fallen significantly in share price from $45 back in January when it hit peak hype, now to $20 per share. They just reported earnings here today before the bell. Absolutely phenomenal earnings. They lost a little bit more money than originally anticipated, but they actually beat on revenue and are expecting phenomenal revenue growth for at least the next 4 to 5 years. I think they mentioned a 30% plus figure, which is absolutely phenomenal. I have another video on Palantir going through my kind of long-term expectations for the company, looking at a bear, base, and bull case. I'm going to leave that in the description down below. Next company on the list, we have Tattooed Chef. This is a absolutely awesome company. This makes up right around 15 to 20% of my portfolio, I want to say. And it is a company revolutionizing the plant-based food industry. They have many different products that they offer, all falling under the category of vegan/vegetarian and frozen food. Food that is very easy to make, relatively cheap, and healthy. The perfect meal for a millennial. Now, the Tattooed Chef expanded into Target earlier this year, but just yesterday they came out and announced more products coming into Target. So now, from my understanding, the Tattooed Chef has close to 20 different products that they offer in Target, showcasing the quality of their product, showcasing the popularity of the brand, and in my opinion speaks volumes to what this stock can do over the long run. They report earnings tomorrow. If you are interested in my opinion on that, make sure to subscribe, as the Tattooed Chef is one of my biggest positions. It's one of my positions that I'm the most confident in. And when we look at them going forwards, I really think this is a company that will be able to do at least $1 billion, if not billions of dollars in revenue by 2024 to 2025. Next on the list, we have Voyager Digital. This might be one of my, I mentioned Tattooed Chef is one of my favorite stocks. Voyager Digital is my favorite stock. It makes up 45% of my stock market portfolio and is a company competing in the cryptocurrency space. In my opinion, if you want to participate in the crypto space without actually purchasing Bitcoin, Ethereum, any cryptos at all, I'd say take a look at Voyager Digital. You can kind of describe them as the Robin Hood of cryptocurrencies. They allow commission-free trading on their platform and interest on a majority of their tokens. They offer 50 plus different tokens, and over 20 of those actually give you pretty high yearly interest rates. Along with that, their platform is very easy to use. This is a company growing at a massive clip, and when you look at their price to sales ratio, it is sitting right around 6. This is a company that has EBITDA margins of 50% plus, thus net income margins of right around 35 to 40%. This is a company that is significantly undervalued compared to its competitors like Coinbase, and as long as they continue growing going forwards, this is a company that will continue to prosper in the cryptocurrency ecosystem. Next on the list, we have Acuity Ads. These guys reported earnings just today, actually, before the bell. Absolutely phenomenal earnings. I loved what I heard from the company. And, one of the most interesting things about this report is the real implementation of Illumin. If you haven't seen my analysis on Acuity Ads, I really recommend you take a look at it. I will link it in the description down below. Acuity is a company that focuses on advertising, really streamlining and really creating efficiency within the advertising space for a lot of larger companies. Now, what they announced recently is the launch of Illumin, a product that is more catered towards really simplifying the process for small and medium-sized businesses. This is one of the first products out there that allows regular day folk to advertise on their own. This is obviously they competed in a different space than like the Google ads or the Facebook ads. Again, if you want a more in-depth approach as to what they do, please feel free to check out my analysis video. It goes more in depth. But Acuity is a company that is trading significantly cheaper than a company like The Trade Desk, which is one of their main competitors. But Illumin, what we just found out is that it's growing at a rapid pace. It's actually doing much better than expected, and in my opinion, Illumin will be the face of Acuity Ads a few years down the road, and in my opinion, will be big once they eventually launch it to the mass market. Currently, they're only doing demos with the product, but again, I love Acuity, makes up like 5% of my portfolio. I actually bought it about a week or two ago. It's a phenomenal company, and it's fallen significantly in price from $26 per share in the US exchange just, I believe it was in February, to right around $10 per share now. Next on the list is Peloton, ticker symbol PTON. Now, Peloton is a company that has, will be facing significant headwinds coming out of this pandemic. Obviously, they faced an incredible opportunity over the past year or two where they're essentially were able to sell every single Peloton bike that they made. When we look at this going forwards, they just acquired a company called Precor, which makes a lot of high-end gym equipment for a lot of the hotels that you know and love. So when we look at a company like Peloton, I think it generally is associated with their bike. Obviously, the whole treadmill situation happened. I really do think that's short-term noise. They recalled the product. They're going to be kind of minimizing their revenue by right around $150 million. A lot of short-term noise. I don't think this really hurts the brand in the long run, as this recall actually might boost their brand. There's a saying, any advertisement is good advertisement, or any news is good news, things like that. So when we look at a company like Peloton, as long as they kind of get out of this pandemic, I think they'll be able to continue growing, and especially once they expand into weights, which is something that they plan on doing within the coming, potentially coming months, potentially 2022. This is a company that will be able to continue growing, and in my opinion, is the perfect candidate for potentially a 3x, especially now that it's trading right around $80 to $90 per share from the $170 per share it hit just last January. Next on the list, we have Teladoc. Teladoc is a company revolutionizing the healthcare industry. I haven't talked about Teladoc in a while, but Teladoc, when we look at this company here, it's somewhat like a Peloton, where it is a company that will be facing headwinds coming out of this pandemic, but I really do believe that the telehealth space is poised to continue growing beyond this pandemic, and that the pandemic really just kind of sped up the transition towards the telehealth space. They obviously acquired Livongo just a few months ago and have become the behemoth in the telehealth space. Their stock has dropped significantly from $310 per share to $146 per share just in the past 3 to 4 months. And in my opinion, a company like Teladoc, as long as this pandemic eventually subsides, I think this is a company that will be able to continue growing in a massive way. as the world continues to transition to telehealth. Why would you go to the doctor's office if you can do all of this online in the comfort of your home and in the cleanliness of your home? Next on the list, we have NIO and Tesla. Now, I kind of bunched these up together as they are in the EV space. NIO and Tesla. Which one do I prefer better? I couldn't tell you. I like both of them. I think Tesla is a phenomenal opportunity now that it's dropped to right around $600 per share from the $900 it hit just last January. NIO likewise hit $66 in January and is now trading at $34 per share. Now, obviously, you can't just look at the decline in kind of market cap of the two to determine which one's cheaper. But when we look at both, the argument with NIO is that it's obviously much smaller and has a lot of opportunity not just in China, but potentially expanding into the United States and into Europe. And then Tesla, same goes for there. Expansion into potentially Europe, and obviously they're doing very well in China. They're both great plays. I think NIO has more potential upside due to the fact that they are a much smaller company. I think NIO is worth like right around $40 billion. Don't quote me on that. While Tesla's worth, well into the hundreds of billions. I think it's like $600 billion plus market cap. So obviously you have that situation where NIO is a much smaller company. But with Tesla, you get a lot more businesses like Tesla Insurance, Tesla Solar, Tesla Battery. You obviously have the automotive business and also autopilot and so many different things. I like both of these, and I don't think you can go wrong with either of them. I think they're the top two plays when it comes to, in my opinion, playing the EV revolution. Next on the list, this is second last stock, Shift Technologies, ticker symbol SFT. These guys report earnings tomorrow after the bell alongside Tattooed Chef. This is a stock that is growing at a significant pace. When we look at the company, they are an e-commerce used car sales platform that are, again, really digitalizing the whole trend of used cars. Especially now with the chip shortage, a lot of car manufacturers are having to cut back their production estimates for 2021. So what's booming? Used cars. Who's going to benefit from that? Shift. We're seeing a lot of increase in web data for Shift, and in my opinion, although they're expecting hundreds of percentage points of growth throughout the remainder of 2021, and for the coming years, they're expecting phenomenal growth in the triple-digit range, and then high double-digit when we're talking about percentages. Next on the list, we have High Tide. High Tide is an MJ company competing in the MJ space. I don't want to say the word on the channel here as YouTube doesn't like it. But when we talk about High Tide, this is a company growing at a massive, massive clip and trading at a significant discount compared to a lot of companies within its sector. High Tide is a company that may very well do 200 million Canadian dollars in revenue throughout 2021 and will continue to grow as they expand throughout all sectors of the MJ industry, not just retail, but e-commerce, manufacturing, and other things along those lines. The management team is very strategic with their acquisitions to allow them to expand into every single space within the MJ sector. Now, these are the 10 stocks that I picked for this video. If you have a different stock or a stock that you want me to look more in depth into, let me know in the comment section down below. Thank you so much for watching and have a great day.